What's up, millennials? Lucid finally announced that they are going to merge with the SPAC CCIV, but we did see a massive drop in the stock price of 45% just in one day. So why did that happen exactly, and what would be a fair price per share for Lucid? Let's find out. Before we start, if you hear any words you don't understand, like pro forma enterprise value or revenue multiple, please check out my SPAC valuation guide that I published on Friday. Also, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm not a financial expert. And if you want to have access to the Excel sheet that I'm going to be using today for this valuation, you can join our Discord. It's free to join if you go to nesami.com/discord and you leave your name and leave your email address. You're going to get access to it. Before we jump into the valuation of this company, we usually go through a brief introduction of Lucid, but in this case you probably already know Lucid quite well. It has been one of the most famous companies out there in the last couple of weeks, I would say. Many people describe the Lucid cars as like luxurious Tesla cars, and they do absolutely look beautiful. And by the way, the cars look very good too. So the deliveries of these Lucid cars are going to start in North America in the second half of this year of 2021. And the deliveries in Europe, the Middle East, and Africa probably are going to happen in the next year, so 2022, and in China in 2023. With regards to a merger date, we don't have a date just yet, but they do expect to close the merger somewhere in Q2 of this year. Before we hop into the fair valuation of Lucid, let's actually talk about the pro forma enterprise value and the pro forma market cap of this company based on the current price per share. Before I start with that, I'd like to say that this is probably one of the most confusing transaction overviews that I've seen so far. And I've made more than 30 SPAC valuation videos, so that's probably quite something. So I'm just going to give you my interpretation of the numbers. If you think I'm wrong, let me know in the comments and then I can correct myself in a future video. The first thing we're going to do is to calculate the pro forma market cap. And that is simply by taking the current price per share and multiplying that by the amount of outstanding shares after the merger. First of all, let's take a look at those shares outstanding after the merger. For this, we can simply use the investor presentation. So we can see over here that they are going to have almost 1.6 billion shares outstanding after the merger. Most comes from just the Lucid shareholders, but also a large portion from the CCIV SPAC holders and also from some PIPE investors. Okay, so 1.6 billion shares outstanding after the merger, which is the number that I put over here in my Excel sheet after the number of shares, so almost 1.6 billion. And then if we go into TradingView, we can see that the current price per share of CCIV is $38.37. So let's actually use that number as well. And now we can already calculate the pro forma market cap by multiplying these two numbers. Well, the Excel sheet is going to do that for me. So here we can actually see the pro forma market cap of Lucid Motors right now. Well, actually after the merger is going to happen. Okay, so based on this number of shares outstanding after the merger, based on this share price, the current pro forma market cap of Lucid is $61.4 billion. And now I'd also like to know what the pro forma enterprise value is. So we just calculated the pro forma market cap of $61.4 billion, but the pro forma enterprise value is simply by taking the market cap and subtracting the amount of net cash that they're going to have on their balance sheet to arrive at that pro forma enterprise value, which basically means the value of the company of Lucid Motors itself. So simply what we need to do is to determine the amount of net cash they're going to have on their balance sheet. This is where things start getting a little bit confusing, but I think I've interpreted it. So what we can see is we have two sources of cash. First of all, the PIPE investors are going to bring in $2.5 billion, as we can see over here in the investor presentation. So 2.5, let's put that in our calculator. And we can also see that we have an amount of cash coming from the SPAC, so CCIV, which is $2.07 billion. So let's just add these two numbers up. So 2.5 plus $2.07, or billion dollars rather, gives us a total amount of cash on their balance sheet of $4.57 billion. However, if we scroll a little bit to the left, we can see that they're also going to have some fees and expenses. So we need to now take this amount of cash and subtract the amount of fees and expenses. which is going to be $0.165 billion. And that is going to leave us with a net amount of cash of a little bit more than $4.4 billion. And that is also the number that I put over here in my Excel sheet, so $4.4 billion. So now we can take that pro forma enterprise value, or sorry, the pro forma market cap rather, of 61.4 billion. We can subtract the amount of net cash of 4.4 billion, and then we're going to arrive at this enterprise value of $57 billion more or less. So that basically means that based on a price per share of $38.37, Lucid, the company, is right now worth $57 billion. So we now know what a pro forma market cap is and a pro forma enterprise value as well. But what would be a fair enterprise value exactly for this company? Well, for that, we're going to use a method where we're going to need two numbers. First of all, we're going to need a revenue number for a certain year, and we're going to apply a certain revenue multiple to that revenue number. Very well. So we need two numbers. First of all, the revenue. Well, for this example, for this calculation, we are going to be looking at the year 2023, because Lucid is going to need a few years to start scaling up. They are going to start delivering this year in 2021, but they are going to scale up more and more. And in 2023, they already expect to have scaled up at least in North America, Europe, Middle East, Africa, and China as well. So here we can see that in 2023, they expect to have a little bit more than $5.5 billion in revenue, $5.532 billion in revenue. That's a number that I put over here in my Excel sheet. So that's the first number we're going to need. The second number we're going to need is a fair revenue multiple. But what is exactly a revenue multiple? Well, imagine there's a company with a valuation, so a pro forma enterprise value of $10 billion. And let's say that company has $1 billion in revenues in a certain year. That means that the revenue multiple is 10x, because you have $10 billion in enterprise value, $1 billion in revenue, 10 divided by 1 is 10. Okay, so that is a fair, or that is a revenue multiple. Now, what would be a fair revenue multiple for Lucid Motors? Well, for that, we can actually take a look at some other companies out there that are trading also in this sector. We can, for example, take a look at Tesla, of course, NIO, XPeng, Canoo, and Fisker. And here we can see those revenue multiples for these 5 companies. For Tesla, we can see it's 10.7x, for NIO 6.5x, XPeng 4.1x, and Canoo 3.6x, and Fisker 2.0x. So we can see that Tesla is the most expensive one, if you will. But a lot of people do say that Lucid could actually be a second Tesla, a luxurious Tesla, if you will. So maybe we should be looking more at the revenue multiple of Tesla compared to the other companies that I've just mentioned as well. So what I've done is I've come up with a range of multiples of myself of 9x on the low end and 11x on the high end. Of course, if you think that these multiples are still too high, you can adapt them, you can change them in this Excel sheet, and you can just play around a little bit to see what kind of valuations you come up with in the end. But we, for now, are going to stick with a revenue multiple range of 9x on the low end and 11x on the high end. So we can now do our calculations with these numbers we've just come up with. First of all, if you take that revenue of 2023 and you multiply that by the low revenue multiple of 9x, you're going to arrive at this number over here, the low enterprise value of almost $50 billion. If you take that same revenue multiplied by 11, you're going to arrive at this multiple of almost $61 billion in enterprise value. And then you can also say, well, if we just take the midpoint valuation, which is simply going to be the average between these low and high multiples, high enterprise values, you're going to arrive at this fair midpoint enterprise value of a little bit more than $55 billion. But that is the enterprise value. We, of course, want to know what a fair price per share is going to be. Well, first of all, we need to go to a market cap, from an enterprise value to a fair market cap. How do we do that? Well, in the beginning of this video, we said that the difference between the enterprise value and the market cap is the amount of net cash they're going to have on their balance sheet. We said that that amount of net cash is going to be $4.4 billion. So now we can take these enterprise values, We can add back the amount of net cash on their balance sheet, 4.4 billion. And then you're going to arrive at these fair market caps for the low end. So that is going to be $54 billion. For the high end, $65 billion. And for the midpoint valuation, a little bit more than $59 billion. And then the last step you're going to take is to take these fair market caps and divide them by the amount of outstanding shares after the merger. And we said in the beginning of the video that was going to be almost 1.6 billion shares outstanding. So if you do that, if you take these market caps, divide them by the amount of outstanding shares, you're going to arrive at these fair prices per share. So for the low end, that would be $33.88. For the high end, it would be $40.79. And for the midpoint valuation, it would be $37.34. Now, some might wonder, what if you apply Tesla's multiple of 10.7x, as we have seen in the investor presentation? Well, if you would do that, and let's actually go back to the sheet over here, let's just put in 10.7x and 10.7x, and then you would arrive at a fair price per share of $39.76. So a fair midpoint price per share for Lucid Motors would be more or less $37 to $39 per share, and that would mean that Lucid Motors currently is actually fairly valued. But don't trust me, verify me, always check what I'm doing, check if everything is correct, because I'm just a random dude on the internet. Also take into account, we have been taking a look at assumptions. We've been taking a look at a predicted revenue, we've applied a certain range of multiples as well. If you change these numbers, the entire calculation is going to change, and your fair price per share is going to change as well. I've also skipped many important topics to make this video not too long, like cash burn and pipe deals and acquisition value versus enterprise value and share dilution, but we might actually do that in a future video. If you liked this video, please consider sharing this video with your friends who are also investing in SPACs like Lucid. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!